Thanks for joining again. I'm Joe, and this is Coverage U. Today's topic is Coverage C, personal property, aka contents. Your personal property or contents is your personal belongings that are not permanently attached to the home. This would be your beds, your TVs, furniture, clothes, cooking, eating utensils, tools, so on and so forth. All those things that you use on a daily basis and work so hard to obtain. Coverage C is also a percentage of the dwelling amount, and that percentage can vary quite a bit. Now, your policy can pay out two ways on your personal property: replacement cost or actual cash value. Now, unless you're in a really tight spot financially, never get actual cash value, whether it be on the dwelling or the personal property. It will make the premium much lower, but you will regret it at the time of a loss. Now, what's the difference between replacement cost and actual cash value? Stay tuned for a future episode when I go into that. Another way to cover your personal property is with a special personal property endorsement. What's so special about it? Well, this option allows you to have your belongings covered at replacement cost on an open peril basis. What that means is that it lengthens the list of things or perils that your personal property is insured against. In other words, instead of having a list of things that you are covered for, you have a shorter list of things that you aren't covered for. So if your stuff gets damaged by something that isn't on that list, you have coverage. With a special personal property endorsement, your policy will cover your belongings unless damaged by a peril that is specifically excluded, such as flood, damage from animals, wear and tear, etc. Another important thing to be aware of is sublimits on your personal property. The policy will have sublimits for certain items like jewelry, watches and furs, goldware, silverware and pewterware, firearms, so on and so forth. Now, these sublimits pertain only to the peril of theft and can be very low. For example, depending on the carrier, they may only pay out a max of $1,500 for jewelry, watches and furs for theft. So if you have a $5,000 ring and it gets stolen, you only get $1,500. Now, if it's destroyed in a fire, you get the full replacement cost. But if it's stolen or mysteriously disappears, you only get $1,500. At this point, you can either have your agent increase the sublimit for you, and that may not even be the best solution because even though you increase the sublimit to, let's say, $5,000, the policy may still only pay out $1,000 per item. So an item of high value, whether it be jewelry, art, stamps, coins, etc., it's best to just schedule those items. What scheduling means is that you specifically list the item on the policy, a premium is charged for it, and it is covered for basically anything, that is, any peril that isn't specifically excluded from the policy. Now, if you have a large amount of items of high value and need to schedule more than your carrier allows, you can have your agent write you a personal articles floater policy, which is a policy specifically for those items. As a final note for today, where is your personal property covered? It's covered anywhere in the world. Why? Because ownership doesn't change by location. But beware, if your belongings are away from home, depending on your carrier, your coverage amount will probably be reduced to 10% of your normal Coverage C limit. Stay tuned for our next episode about Coverage D, loss of use. Thanks for joining me on Coverage U, where it's all about you.